What is going on, my friends, and welcome back to another video on the channel. Well, we're seeing a pretty fantastic move from ADA right now. Now, I know you may say, Tyler, it just dropped a lot. Why is that fantastic? Well, I'm going to talk about that a little bit later in the video, but I think that this fall could definitely open us up to a big opportunity that we'll go over again towards the end of the video, so definitely do stay tuned for that. But at the moment, what we're seeing is a retesting of this 20 EMA on the 4-hour charts, which is a fantastic and very important level, okay? Just over the last few weeks, as we have been seeing this move up, I mean, we've come down to touch this 21, 2, 3, 4, 5, make that 6 times throughout this entire run up. And so seeing it come back down to this price, especially after being as extended as we were, isn't anything to be concerned about, in my opinion. Even if we continue to fall, I'm still not all that concerned because we've seen these movements happen time and time again. I mean, think about if you panicked down here when the price was at $1.91. You missed out on a huge gain because it did something that it naturally does. You know what I mean? Like, seeing these retracements back to our EMAs is very natural. So let's talk about where we need to go from here and what we need to be looking for. So optimally, best case scenario right now is that we can start to recapture some of our short-term EMAs and use this as support. So what I mean by that is if we can not clear this level, about $2.70, if we could hold this, best case scenario is that we tune back into our 1 hour, not the 2 hours, let's go to our 1 hour, our 1 hour EMA. And we use this level of support, this 4-hour 20 EMA that we're on right now, to then go back up and clear our 50 EMA on the 1 hour and then re-enter back into the apex of this triangle. That would be best case scenario. That would be best case scenario because then at that point, we would then be looking at a fake out to the downside, which is typically followed by a breakout to the upside. So it's best case scenario right there. But let's talk about if it does continue to fall. If we do see this thing continuously just going down, there's a few important levels below us that I think will still hold as well. And so let's go over them. So the first thing that I'm going to be looking to see happen is that if we do continue to fall here, that we interact with this Fibonacci retracement level off our most recent swing low up to our swing high event. So as you can see here, there's going to be these two little regions. There's going to be these two little boxes that are going to serve as important. Let's go ahead and let's get our rectangles. So of course we had this 0.382 to our 0.5. This has been one of the most important retracement levels that we have seen recently. Within this run, we have come back down to the 0.5 multiple times over and over and over again. And if we were to do it again, I would not be surprised in the slightest. Again, and I want to make this a little bit darker. Let's go ahead and let's do that. And then I'll just so you guys can see it a little bit better. There we go. So what we can see is that this little level right here has been incredibly important. So even if we were to lose this 20 EMA, be looking to see if we hold some support here. Now this is going to be at about, right here, this is going to be at about $2.67. If we're able to hold this as well, start to bounce and then recapture the 20 EMA, definitely do expect that we're going to work our way back up and maybe even work our way back into that triangle. Now below this, there's one more important level as well, and that's going to be our key 618 to 786 level. Now at that point, if we were to start to fall down below here, our 50 EMA on the 4-hour would have also worked its way back into here, and I would honestly be pretty surprised to see that we lost this. So right now, I would say our lowest level of support is going to be about $2.50. I'd honestly be pretty surprised that if right now we were to lose $2.50, especially for how close we're starting to get to smart contracts. So definitely do look that if we lose the 267, we'll probably see more of a continuous fall back into the 260 range, in which we would then probably interact with this 4-hour 50 EMA, find some support, and continue upwards. Now, if we lost $2.50, I would make a video as soon as I possibly can with some further breakout projections to the downside, but again, that would be honestly very surprising. So as we always talk about these bust stops, I think a fantastic bust stop could, 1, be 267, or 2, be this range between 260 and 250. I'd be quite surprised again if we were to lose that. Now, one thing I want to talk about is, this is a pretty large red candle. This is a bit of a bigger red candle, and I'm honestly not too surprised. Now, let me explain why. Because I said earlier in the video that I think this will open us up for a great opportunity if we can establish some support on one of those levels that we talked about just now. So what I'm going to do is I'm going to draw some Fibonacci levels. Let's go from this swing high down to this swing low, this one to this one, and all I'm going to do is just draw some horizontal lines. So let's get one there. And now we're going to delete that. Boom. There we go. And let's draw another one. Boom. Let's go swing high, swing low. Let's draw another horizontal line. At our Fibonacci extensions, our 2.618 Fibonacci extensions is what I'm drawing these lines on. So then what I'm going to do is I'm going to draw another one. Let's go from this one. Boom. Swing high to swing low. Let's just plop another little line right there. And now what I'm actually going to do is I'm going to zoom all the way out. I'm going to zoom all the way out to this all-time high that we had set. And I'm going to go down to our swing low, this one down here. And then I'm going to draw another line on our 1.272 extension, this one right here. So what we can see is that that's going to be a very similar line. It's going to be right into here, boom. And let's just draw another line. And now let's get rid of this and let's look at this. Look at the amount of resistance that there is in this small level. There are 3 Fibonacci extensions just in the midterm and 1 long-term Fibonacci extension level all right here. And we met all of those targets. Those were all breakout targets. All of these green lines are breakout targets, and we met every single one of them. Well, of course, now that we've met them, they're going to serve as some resistance. They're going to be serving as a level we need to be able to work our way above. But think about the fact that as we do have resistance, a general rule of resistance is that if you can clear it and establish some support, it'll serve as just as strong of support as it did resistance. Meaning that with it being such a strong level of, again, resistance, that we come up and we clear it, it could serve as that same level of support. Now, you guys do know that in the long term, when we're looking at this long-term Fibonacci extension level, my price targets at the moment are still well into the $3.40s for the midterm. And a long-term price target, if we see this bull run continue, is $4.90. Establishing support on a level this strong could get us there. It could very, very possibly get us there. Not like this, not like that. But definitely over the long term, if the bull run does continue, which is of course a big contingency, but if the bull run does continue, this is still very possible off of these due to how strong this level of support is, because it has been one of the strongest levels of resistance that we've seen up until this point. So definitely do look to see at those support levels that we just talked about earlier in the video. Do look to see if we can hold them there and come back to recapture this. Of course, there's that inherent level of resistance at $3. If we can come up and break it and establish some support here, I would make a video talking about some "this is huge" or something like that, because I think at that given point, we could be looking at a lot of upward potential. Of course, we would have to look at our RSIs, our MACDs, and all of those things. But don't forget, guys, that if we simply go out to the 1 week and we just look at our MACD, for example, we can see here on this 1 week MACD that we're just getting started. We're just printing some of these green bars, and there still could be a lot of upward potential before we see this thing pulling back. And the establishment of support on a level like this one could definitely be the rocket fuel we need to see this thing continue upwards and to execute this full potential in which we may have, especially on things like the MACD. So definitely do be looking forward to this. You know, these pullbacks are healthy, they're natural, and they are important. And you know, when we see things like this, they're not something to be scared of. It's something that we need to look at and say, okay, well, this is what's happening. We've seen this multiple times in the past. This is nothing new. And until we start to lose some of these key levels, like 100 EMAs on the 4 hours, then we can start to get a little bit more like, okay, maybe we need to be more concerned here. But with that being said, guys, definitely do be looking forward to those support levels we talked about, and anticipate that if we can hold them and break above this level, that could be an absolutely amazing opportunity for many of us who have invested in the ADA. So I will update you guys as soon as I possibly can. Of course, if you did enjoy today's video, you can let me know by smashing that like button and subscribing to the channel if you are new. I post on this channel 2 to 3 or 4, it just kind of depends on the day, times every single day. So I will see you all very soon. I can't wait to see you all next time. Peace.